As Ukraine fights for its survival on the battlefield, it faces a second, quieter war, an economic one. The country's GDP is projected to shrink by 4.5% this year, a devastating blow for a nation already under siege. Years of conflict have eroded Ukraine's factories, farms, and infrastructure, pushing the economy to a breaking point. This is not a typical recession, it's a war-driven collapse, where every missile strike and displaced family deepens the crisis. The question now, can Ukraine's economic resilience hold as the war drags on? The stakes are enormous, not just for Ukraine but for the global economic order. The Ukrainian economy is currently facing an unprecedented crisis. The ongoing recession is not just a temporary downturn, it's a deep-seated issue built upon 5 critical pillars of pain. These aren't isolated problems, each one is intricately linked, compounding the next and creating a cascading effect throughout the entire system. First, we see negative GDP growth down a staggering 4.5%. This sharp decline directly reflects the devastating impact of the war, including the widespread destruction of critical infrastructure, vital assets, and the severe disruption of daily life for millions of Ukrainians. Second, unemployment has reached a concerning 16.2%. This means millions of Ukrainians are now without work, leading to a significant decrease in consumer demand and a deepening of economic hardship across the nation. Families are struggling, and the economy is suffering. Third, the Ukrainian central bank's high policy interest rate, currently at 15.5% while necessary to combat soaring inflation, makes borrowing prohibitively expensive for businesses. This severely restricts investment and growth opportunities. Fourth, inflation, currently at 8.5%, continues to erode the value of savings and wages. This puts immense strain on Ukrainian families, who are struggling to afford basic necessities, and it also places a significant burden on already stretched government budgets. Fifth, public debt has soared to an alarming 110% of GDP. This unsustainable level of debt is forcing the government to make incredibly painful choices regarding spending and investment, making some form of debt restructuring virtually unavoidable in the near future. Each of these pillars feeds directly into the next, creating a vicious cycle of economic distress and instability. This cycle touches the lives of every single Ukrainian citizen, impacting their livelihoods, their families, and their future prospects. Breaking free from this cycle will require a comprehensive and multifaceted approach. It will demand more than just statistical adjustments and financial maneuvers. It demands resilience, innovative strategies, and fundamental economic reform. The challenge ahead is undeniably immense, but so too is the unwavering determination of the Ukrainian people to endure, to rebuild, and to create a brighter future for themselves and generations to come. Ukraine's economic indicators are locked in a vicious cycle. Shrinking GDP and high unemployment/consumer spending, dragging the economy further down. The central bank's high interest rates fight inflation but choke off investment and job creation. Meanwhile, a ballooning deficit and soaring debt force tough fiscal choices, even as international loans keep the government afloat. Each problem amplifies the others. Unemployment weakens the tax base, deficits fuel inflation, and high rates stifle recovery. Breaking this cycle will require coordinated action on all fronts. For Ukraine, the path forward is as complex as it is urgent. Not all sectors are suffering equally in Ukraine's recession. Agriculture, a national cornerstone, is down 10%. Mined fields and blocked ports threaten both local livelihoods and global food supply. Manufacturing, especially in the east and south, has seen a 15% drop as factories and supply chains are destroyed. Services, now 60% of the economy, are mixed. It adapts, but retail and hospitality struggle amid inflation and uncertainty. The banking sector remains stable, but faces risks from bad loans in war-torn regions. Energy is in crisis, with half of generating capacity damaged. Power shortages threaten every other sector. Ukraine's very survival hinges precariously on 2 critical lifelines, acting as the bedrock of its resilience. The first is the massive influx of international aid, a testament to global solidarity. This aid is not just a handout, it's an investment in Ukraine's future. The second is the implementation of a strict and carefully calibrated monetary policy designed to stabilize the economy. In 2025, a substantial $40 billion in aid from global partners was pledged and dispersed, providing crucial financial support. This influx of funds keeps the government running, ensuring the continuation of essential public services and critical infrastructure projects. However, This vital support comes with tough conditions attached, reflecting the need for accountability and reform. These conditions include stringent fiscal discipline, requiring careful management of government spending and budget allocations. Furthermore, there's a strong emphasis on implementing comprehensive anti-corruption reforms aimed at improving governance. And finally, strict oversight mechanisms are put in place to ensure that funds are used effectively and transparently. The National Bank's policy of maintaining high interest rates has proven effective in taming runaway inflation, bringing it under control. However, this success has come at the cost of stifling economic growth, creating a challenging trade-off. Prudent management of foreign currency reserves and proactive measures to stabilize the banking sector have been crucial in maintaining financial stability. These efforts have successfully prevented a complete financial collapse, averting a potentially catastrophic scenario. But this delicate balance is heavily dependent on the continued flow of international aid, highlighting the nation's vulnerability. And, ultimately, a lasting and sustainable solution hinges on achieving an end to the ongoing war and beginning reconstruction. The margin for error in this situation is razor thin, leaving little room for missteps or unforeseen challenges. Ukraine's economic future is inextricably tied to both the unwavering resolve of the international community to provide support, and equally important, its own commitment to policy discipline and the implementation of crucial domestic reforms. In 2025, Ukraine's unsustainable debt forced a sweeping restructuring deal with international bondholders. The agreement slashes principal, extends maturities, and reduces interest payments, freeing up funds for defense and humanitarian needs. For investors, it's a hard reality. Restructuring means losses and raises questions about future risk. Yet this move is vital for Ukraine's survival and could lay the groundwork for future investment once stability returns. The challenge is to frame this as a one-time crisis response, not a sign of chronic instability. If managed well, restructuring can restore confidence and attract long-term strategic investors. The outcome will shape Ukraine's recovery prospects for years to come. Ukraine's economic future hangs precariously in the balance, a delicate equilibrium teetering amidst the ongoing conflict. The nation stands at a critical juncture, its path forward obscured by the fog of war and global economic headwinds. The biggest unknown remains the war's duration, casting a long shadow over any attempts at forecasting or long-term planning. Will it be a protracted struggle, or can a path to resolution be forged in the near future? This uncertainty permeates every aspect of economic life. A prolonged conflict inevitably deepens the crisis, exacerbating existing vulnerabilities and creating new challenges for businesses and individuals alike. The longer the war drags on, the more profound the economic scars will become. Conversely, a swift and decisive peace could spark a rapid recovery, unleashing pent-up demand and attracting much-needed investment. The potential for growth is there, waiting to be unlocked. To not only survive this turbulent period but also to rebuild a stronger, more resilient economy, Ukraine must act decisively on 6 critical fronts. These are the pillars upon which future prosperity will be built. First, ensure the transparent and efficient use of international aid. Every dollar must count, channeled effectively to where it's needed most, with rigorous oversight to prevent corruption and waste. Second, provide robust support to small and medium-sized businesses with targeted stimulus packages and incentives. These enterprises are the backbone of the Ukrainian economy, and their survival is paramount. Third, prioritize the repair and reconstruction of critical infrastructure, especially in the energy sector, to ensure a stable and reliable power supply for homes and businesses. Fourth, accelerate integration with the European Union to open up new markets for Ukrainian goods and services, and to anchor crucial reforms that will strengthen the rule of law and promote good governance. Fifth, implement comprehensive programs to retrain and reintegrate displaced workers and veterans into the workforce, providing them with the skills and opportunities they need to rebuild their lives and contribute to the economy. Sixth, maintain stable macroeconomic policies to build investor confidence, attract foreign capital, and create a predictable environment for businesses to thrive. The choices made now, the policies enacted, and the reforms implemented will ultimately define Ukraine's economic destiny, shaping its future for generations to come. It's a path toward survival, a journey of recovery, and the unwavering hope of building a stronger, more prosperous future for all Ukrainians. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.